All right. What is up, my friends? This is, man, when you hear me say that the financial world is moving very, very quickly and it's hard to keep up with, this is just an example of one of those things. One of the many things that I found recently. I'm going to try to share with you some real gems today. And then I'm going to talk a little bit about the stock market and some of the potential dangers I see there. I feel pullbacks coming kind of across the board. And part of me goes, well, if you feel that way emotionally, then probably it's not happening. You probably should buy just to fade yourself. But it's not that kind of feeling. It's interesting. So I'm going to talk about that. 8% APY. How do you get that? Well, let's take a look. You know, I Googled it, and this is bankrate.com. Best CD rates for January 2022. What do we got? 1%. Well, that ain't it. So 1%. This is what a lot of the banks, and some of these banks, Capital One is a pretty big bank. Here's a Goldman Sachs account, another Capital One. Look, you see the same one twice. As you can tell, some of these are ads. And, those are the best rates, 1%. That's no good. That's nothing. Savings account, what about those? Well, I went to NerdWallet for that. 7-base savings account rates, 0.5%. Somebody told me they found 3.3% somewhere, and I was like, wow. That's a lot, but not really, because here's what's going on. You can almost tell that the banks are owned by the government. And even though the government doesn't technically own them, a lot of them are publicly traded companies, they're owned by investors. They're owned by the regulators, basically, because they can't sneeze without permission from the regulators. The banks feel this way. Think about it. When was the last time you had a bank go out of their way to do something? When you had a banker called you or sent you flowers or did something that a normal salesperson would do or a normal company would do and they're trying to woo you? That's not happening in the traditional banking space. It is happening, however, in the crypto banking space. And this is where I want to show you some things that are happening that are totally not what you would expect, that are really, really interesting. So I'm going to start with Gemini. So Gemini, maybe you remember the Winklevoss twins, from the Social Network movie. These are the guys who actually had the idea for Facebook. Zuckerberg stole it from them. He was supposed to partner with them, and then he stole the idea, cut them out. They sued him, and they won. They got $60-some million from Zuck before Facebook went public. It was a great business deal on Zuck's part, as he would have owed them billions when he went public. And so these guys got screwed, and they started Gemini, which is a crypto exchange. I'm going to show you in just a second. But the Winklevoss twins, they learned the legal process. They understood, and they're also both very, very smart. They went to the same college as Zuckerberg. And so they're really smart guys. They understood cryptocurrency. They got into Bitcoin very, very early. They totally understood it. So they made a lot of money there. They made a lot of money off the settlement with Zuck. They've done very well in their business ventures. Gemini is a crypto exchange that is, what I see from Gemini is two things that I think are really important. Number one, their focus on being as much like you would expect a bank to be as possible. Very, very highly regulated. You can tell. And everything I've read about it, they invited the regulators in. They were like, come in, regulate us. Tell us how to make this okay. Their focus on security. In fact, one of the tabs right here, on their website is security, which I thought was interesting. If you look at Bankrate, they said why you should trust Bankrate. So Bankrate's saying you should trust us. Gemini is saying, let us tell you about our security. Let us tell you about what we are doing. Trust is our product. That's what they're selling. They're selling trust. There's a few different ways that they do this. And one of the things that's really cool about it is, and I'll show you in a second, is how they're using their own coin, the Gemini US dollar, the GUSD, in order to build that trust and to draw people in. It's a great marketing tool. So let's look at it. So it's called Gemini Earn. So there's a Gemini exchange. You can buy and sell cryptos there. They have a credit card, of course. So this is a bank, right? This is a new age bank. So right now we have new age banks, which are, not standardized. They're not traditional. The traditional banking model is really dead. Can you imagine working at a traditional bank right now and thinking you are in the right place to be? It is so antiquated. Everything there is so old. Everything has been done the same way for so long. It's so bad. Here is what's happening. Innovation is taking place in money, and this is part of it. So Gemini Earn. Let's go look at this. What is Gemini Earn? And you can Google or you can YouTube search all kinds of videos on this anytime you want. So you go to Gemini Earn. Hey, put your crypto balance to work. With Gemini Earn, you can receive money on your cryptocurrency. And here is the calculator that they provide, which is really, really simple. Now, the highest APY generation here at Gemini is with the Gemini dollar. And one of their things that they have on here, I don't know if it says it here, if it just said it in the app when I did it, but basically they say, hey, our Gemini US dollar will always be worth $1. So you deposit in $1 into the GUSD, or you buy the GUSD token, we will always give you $1 back exactly for it. If you look at other places, like for example, if you look here on CoinMarketCap, the Gemini dollar, it's ranked 330th overall, and you can see it's trading for a little under that, 99.69. If this ever got too low, though, you could just buy it wherever, whoever's selling it for that, and you could sell it back on Gemini on the website for $1. So that's kind of good to know that they are sticking to, hey, this is $1. It's worth $1. It'll always be worth $1. It's our coin. We can do whatever we want with it. It's worth $1. But what's really interesting is they'll pay you 8.05% APY to hold this. And when I first saw that, I was like, okay, it's got to be an introductory thing. There's no way they're going to continue to pay me for years, because when you're putting money in savings, which right now you get basically nothing. I mean, what do we find the best savings rates is 0.5%, right? 0.5%. So they're probably, at some point, they're going to carpet pool, and, they're going to take this 8% and it's going to go down to next to nothing, just like the banks, right? That's what I expected. When I did my research, though, what I found is that this rate has actually only gone up. It's gone up multiple times. In fact, it started off in the low 7s, went to the mid 7s, and now is in the low 8s. So if you go back into YouTube and you watch videos of people talking about Gemini Earn and talking about GUSD, you'll hear them say, yeah, they're paying 7.4%, they're paying 7.9%, or whatever it was. They're paying out less than they are today. So they're paying more out today on this. Now, some people, will say, well, how are they able to do that? Guys, this is just banking. This is just how banking works, how it's always supposed to work. You're not supposed to get no money when you deposit your money in the bank. The bank is supposed to pay you for your money so that you will leave it with them, and then they take your money and they go and they invest it or they loan it out. It's their responsibility to make their money the 8% plus, which is actually very easy to do in the crypto space. 8% isn't a lot, and that's why these banks are going to murder it. So you have this calculator here, which will show you, okay, let's say you put $100,000 in. It tells you, here's your year one projected interest, $8,000. Now, it does say on here that the APY can change anytime. They reserve the right to do that, which is, I think, smart on their part. Should they need to, peel it back, they can. But as I said, historically, it's only gone up. So this gives you your projection 2 years, 3 years, 4 years. Well, that'd be nice. You could take your 100,000, which is earning you literally nothing in your savings account, and in 4 years have 136. That's pretty cool. This is great for savers. This is great for people who want to park cash between projects or between investments to actually get paid. Here's also something that's really cool about it. You get paid daily interest. So you get paid interest every single day. They don't pay you once a month or once a quarter like a CD. They pay you daily interest, daily, and you can see it right there on your account. So you can watch the money accrue right there. Now, this to me is the safest thing I've seen. Also, it's known that Gemini, you can research this on your own. I didn't pull it up. I should have. I'm sorry. But Gemini has the largest insurance policy of any crypto exchange. They got the motherlode. They got the biggest insurance policy that's ever been given. So they are prepared. Security is their number one protocol. They have their own currency here, which they're paying you a nice premium on. So this changes the game. This changes the game for savers. This changes the game for people who already have enough money. If you've already made a lot of money and you don't need to take a huge risks anymore, you don't need to invest in stocks, you don't need to do anything crazy. Some safer plays like this, where you're getting, 8% APY, might make sense for you. Now, I'm just telling you what I'm doing for myself here personally. Gosh dang it, I'm such an idiot. Sorry about that. Was supposed to clear myself out. I just get so excited to talk about these things. Sometimes I forget to do the most obvious thing, which is to get myself out of the way. Apologize for that. So you got 8% APY here on this Gemini Earn, which is very easy to buy. You sign up for an account with Gemini, you sign in, you set up your security there. It's very simple. You wire the money from your bank. You can ACH the money from your bank. They do have limits on the ACH of $1,000 a day. So if you want to put like 100 grand in, you need to wire it. I think that is because they are so regulated, because they have initiated themselves to be so heavily regulated. And of course, the regulators are on the side of the banks. Like I said, the government pretty much owns the banks. So they say, we don't want to make it easy for people to give you money. Okay, cool, no problem. We'll only do $1,000 and then we'll make people go to the bank and wire it physically. They have taken so many steps to do that. Here's the reason I had pulled up the Gemini dollar price over here, because what's cool about CoinMarketCap is you can see, how many people are investing into this, and you can kind of see the growth of it. It'll also show you big wallets. This wallet right here, for example, has 51 million Gemini US dollars in it. I thought it was really interesting that these two wallets have exactly 10 million. So somebody with some real cake is putting $10 million in. I can almost guarantee you this is the same person. It makes me want to send this wallet address 1 GUSD, because you can tell this is like the type of person who wants it to be exactly 10 million. Just send them like 1.5 GUSD so it messes this up. I'm tempted to do that. I might do that actually. And then watch them sell it to make it go back to 10 million. But if you had 10 million in GUSD, you're making $800,000 a year off of this 8%. So, there is, I don't know, there is a lot of cash rolling through this Gemini Earn, and most people don't know about it, or they feel like, well, it's a cryptocurrency. It's a stable coin. Okay, Gemini dollar is a stable coin. Now, I'm just telling you what I've found in my own research. Obviously not financial advice. I'm not a financial advisor, but I'm telling you what I'm going to do personally. Personally, I'm going to take half of my cash and I'm going to put it into this Gemini dollar. And I'm in the process of doing that right now. And so the way I look at that is, for me, because I'm ultra conservative, if I put half of my savings in there and keep half of it in the bank, then at least I'm earning like a 4%. The math doesn't quite work out that way, but I'm earning like a 4% on it total. I'm earning 4% total on my 0 at the bank and my 8 in here. And that makes me feel okay. It makes me feel a lot better than just earning 0 to begin with. And as we continue to see things evolve in crypto, and I will probably continue to, as I continue to save money, I will put the new money in here and just keep the half that I have now in my traditional bank savings as just a blankie, if you will. That's my plan for this one. Now, here's what gets really interesting, because for people who have crypto, I had no idea that this was possible, but there are other ways too that you can make passive income without taking any additional risks. Crypto.com is a great place for that. Of course, they have the Matt Damon endorsement. You've seen Crypto.com. If you watch the UFC, they're a big sponsor. Crypto.com's right on the uniforms for the UFC. Also, Crypto.com just took over the Staples Center in Los Angeles, where the Lakers and the Clippers play, and the Kings. It's now Crypto.com Arena, I think. They took that over. Crypto.com, I tested this yesterday. They have some really cool products. They also have an Earn product. Okay, so they have a wallet. This is a bank. They have credit cards. They have a pay program. They have the Earn program, and they have, of course, the crypto exchange where you can buy crypto. They also have their own coin called the CRO. The crypto Earn is what I'm mostly interested in personally, because I own some different cryptos and want to know exactly, hey, how much can I make on the cryptos that I already own. So here's what you can do. You can go in here and you can look at this, and let's just look at a couple, like for example, Bitcoin. I moved one Bitcoin over to here yesterday. So the Bitcoin I think is worth like, let's call it 45,000 per right now. And it's showing down here the CRO stake. So if you stake their coin, which is the CRO, you can earn higher percentage rates. But I don't have any CRO staked. And if you lock up your Bitcoin for 3 months, look at this. They pay you 4.5% on it. 4.5%. Now, what's interesting about this is that you get paid in the coin, not in dollars. So what I mean by that, and why that's so interesting is you are going to make Bitcoin out of this, not dollars. If the coin goes up or down in value, you're still making the coin. So if Bitcoin doubles in price, if I'm making 4.5% on my one Bitcoin, that means I'm getting 0.045 Bitcoin per year, right? I'm getting 4.5% of a Bitcoin. If Bitcoin doubles in price, I'm still getting 4.5% of a Bitcoin. If it goes halves in price, I'm still getting 4.5% of a Bitcoin. So should your investment, so if I own Bitcoin anyway, I'm going to own Bitcoin anyway, should your investment increase, then the amount that you're earning also increases. How cool is that? And if you want to stake $4,000 worth of CRO, so that means you buy the CRO and you hold it, then you can get 6.5%. If you buy 40,000 or more, you can get 8.5%. How crazy is that? So you could get 8.5% on your Bitcoin. Now, Bitcoin's not the only thing that you can stake here. And crypto.com is not the only place you can stake it. I currently have several cryptos staked at Coinbase. I have Ethereum staked there making 4.5%. I have Atom there, Cosmos, which is this one, staked, which is making 4% or 5%, I believe Cosmos is making on Coinbase. Algorand I have over there, which is making like 4%. So I'm getting, rewards. I have Cardano staked in a stake pool for Cardano, which is making 4.5%. So you can see crypto.com has not been the best for those two. So I'm staking these wherever they're getting the best deal. I'm going to be staking my Polkadot, which I just purchased here. And you can see even with my no CRO stake, it pays 10%. Now, why would Polkadot pay 10% and Bitcoin only pay 4.5%? Why is that difference? Well, the reason is because Polkadot, you can actually stake and earn the Polkadot coin, the token, at I think 12 or 13%. So what they're doing is they're saying, hey, we'll give you 10% and we'll make the 2 or 3% ourselves. Plus we have the asset so we can loan it out. We can do all sorts of things with it. It's great for crypto.com. When I transferred my Bitcoin yesterday, the other thing I tested with these guys is customer service. And I can tell you right now, without question, Coinbase is the worst for customer service. I feel a lot safer about crypto.com. I sent them a message. Immediately, a live person chatted with me, walked me through what was going on when I was transferring my Bitcoin over. And it was amazing. So crypto.com, the best customer service. Gemini, definitely a close second. And Coinbase, a distant third. But Coinbase has better rates. Like I'm staking my ETH there for 4.5%. That's better than you get here, as I recall. Let's double check it. So they're saying 5.5% here. And so that's interesting. That's interesting because that has gone up. So you do have to lock it up for 3 months. So if you do flexible, which means you can take it out any time, then it's going to be less, 3.5% there. If you do 1 month, you get 4.5%, 3 months, 5.5%. And that's pretty cool. Now I wonder if this continues to go up. Wow. So if you lock up your Ethereum for 3 months, have 40,000 or more staked in CRO, you can earn 8.5% on your Ethereum. That is so wild. So the reason I'm bringing this up is because a lot of people buy crypto or they've invested in something and they just sort of, buy it and just hold it. And that's fine. But if you're going to hold it, you may as well hold it somewhere that's going to pay you passive crypto for free. I mean, just for holding it. Now, some people will tell you, hey, not your keys, not your coins, right? But I think we have to, if crypto is going to be mainstream, we have to get away from some of those sort of worst case scenario, fear-based thoughts. And we have to look at certain exchanges that we can trust. I feel like crypto.com is one that we can trust. I feel like Gemini is one that we can trust. Of course, I could be wrong. Of course I could be. But I feel like we can trust these. And Coinbase as well. Coinbase is publicly traded. Gemini is the most regulated, like out in front of security one that I've ever seen. And crypto.com is literally absolutely the most mainstream, by far the most mainstream. And not just because they're spending a lot of money on advertising. Some people would say, well, hey, all that money they're spending on advertising, that's going to hurt their products. That's going to hurt their ability to pay you back on your earn if, we enter a bad market or something like that. But I disagree with that, because having the huge advertisements is what continues to bring new money in, and bringing in new money makes it very easy to pay these things out. So I disagree on that. But look, crypto.com has their own coin as well. And remember, when these organizations have their own coin, they're basically making that for nothing. And so like even the Gemini US dollar, the GUSD, they mint that coin for nothing. So they're able to mint this GUSD, this Gemini dollar, for essentially no money. Now they have to pay you back, right? They've committed, they've said, we're going to pay you back $1 for every Gemini dollar that you have, but you're giving them the dollar to begin with. So they're able to essentially raise this money, which doesn't cost them money. And that has been huge. Now, Gemini, not big on the advertising. So some people would be more attracted to that. In my opinion, although you can get other things on here, like your Terra USD pays 7.99, USD coin pays 7.99, Filecoin pays 7.25. So a lot of the stable coins, they're here. Gemini is paying really well on those. So they are really sort of positioning themselves, in my opinion, to be a bank. They're over, outreach to the regulators, the fact that they're really just paying you a lot for the stable coins. They really want to be a bank, traditional bank, where you give them your money and they lend it out and they figure out how to make money with it. And these guys are obviously very good at that. The Winklevoss twins are very good at that. So those are just a few things that I wanted to touch on. Now, a couple of things. Let's go over. So that 8% Gemini earn is something to really, really take a look at. And for your crypto, don't just buy your crypto and hold on to it. Look and see, check some of these different exchanges and see if you can get paid passive income. Like my Cardano, Cardano is probably the one that I believe the most in. If someone put a gun to my head and said, you have to pick one crypto, it'd be so hard for me to choose between Cardano and Bitcoin. But I would probably pick Cardano because I believe there's more upside in Cardano. Like Cardano's at $1 something. I could see Cardano one day being $1,000. I think there literally could be 1,000x in Cardano. I think Bitcoin has 100x in it, and that's probably the end of the road. Or, it just varies slow from there. If you get 100x in Bitcoin, I don't even know if you will. But I feel like there's probably 10 times as much upside potential in Cardano. Plus, you do have the staking structure with Cardano, which is getting me like 4.5%. Now, of course, with crypto.com, as we just saw on my Bitcoin, I am now going to be earning 4.5% because I have $400 or less here in stake. I will probably stake the CRO as I am, staking more and more coins with them. It's going to make sense for me to do that, right? Because let's just look at the DOT here. Where is Polkadot? There it is. So Polkadot, I'm going to get 12.5% instead of 10 if I stake the 4,000. So it's going to start to make sense for me to stake the 4,000 CRO. By the way, they also pay you for the CRO. So staking means the holding of CRO in your crypto.com app wallet for a period of 6 months. So you buy and you hold $4,000 worth of CRO for 6 months, and then you get paid these higher rates. And so that's probably going to make sense. That's probably going to make sense if I'm staking enough stuff there, to put the 4,000 in there. Since it's not a fee, I'm actually getting the coins, and they're actually paying, I believe, well, let's look here. Crypto.com coin, let's find out. So they're paying 6% across the board. They're just paying 6%. So they're paying 6%. So you buy $4,000 of it, and they're paying you 6% APY. In crypto.com coin. So there's a lot of things here that are really interesting to help mitigate risk. Listen, when you own crypto, it's very risky, right? When you invest in anything, it's very risky. Speaking of which, metaverse, a lot of people have been asking about the metaverse. That's my next video. I don't know if I'm going to get it out today or not, but that will be the next video that I make, will be the metaverse investments and the investments I plan on making in the metaverse, which is going to be bonkers, by the way. But don't have any FOMO with that, okay? It's brand new. We're in price discovery. It's not something you need to worry about. Like, I need to get into the metaverse right away. You don't need to. There's plenty of time. It's going to take years to build out. Facebook's going to take some lumps between now and then. You just trust me on that. There's no reason to have FOMO in the metaverse. But with crypto, if you're going to own it, if you can stake it in these different places, you can deposit it with these different organizations that are, in my opinion, credible, and get paid in crypto just to stake them there. If they're long-term investments that you have anyway, who cares if you lock it up for 3 months? Locking it up for 3 months is actually smart for me because, two reasons. Number one, security. Like if you lock it up for 3 months, someone comes to your house at night, gunpoint or whatever, and tries to rob you of your crypto, you can't withdraw it. Also, it keeps you from making emotional decisions. If you don't have the ability to sell your coins, then it sort of forces you to hodl, which is good, because you really shouldn't invest in crypto that you don't want to own for years. You should buy cryptos that you want to own for years. So let me go back here and just show you a couple of the ones that that you should look at if you're interested in that. I'm just going to go to the home page here, CoinMarketCap. I'm going to show you some of the ones that I like. So obviously Bitcoin and Ethereum. I really like both of those. Although I'm feeling a little frothy. Just the whole space. I feel like a correction is coming. I really do, and I really hope I'm wrong. Bitcoin and Ethereum, I like. Solana, I haven't gotten into. Cardano, I really am bullish on. That's one you can stake your Cardano and make 4.5% pretty easily. USD coin is a stable coin that you can make a good rip on. XRP is still not trading in the US for the most part, unless you're grandfathered into one of the international exchanges. You can't even buy this now because of the SEC lawsuit. But Polkadot, which is one that I recently purchased, this one you can stake and make 10%. I just showed you. So it's a top 10 crypto, which, by the way, all the supply exists. And that's one of the things that's really big for me. I like that about that and Avalanche too. All of the supply for Polkadot already exists. The circulating supply is full. So they're not, you don't have new supply coming on, which is huge in my opinion. And so there's a lot of cool things about it. I'm not going to go into it directly, but it's a top 10 crypto you can make 10% on. You get paid 10% free coin. Same thing with Matic. That's another one. So that's let's see, 12, 13, 14, 15. I don't know why it's tripping right now, this website. But Polygon, MATIC, it's a couple bucks, but it's a top 14, top 15 crypto. And you can get paid 10% on it. We just talked about Crypto.com coin. That's a top 16 coin. You get paid 6% on that one at Crypto.com. So when you buy these, the APY is not the reason to buy them, but it's something that you should do if you believe in them already. If you invest in a crypto because you like it and you can get paid for it, it helps you mitigate your risk. It helps you accumulate. It helps you compound your investment over time. It's just like a dividend, if you will. When you automatically reinvest your dividends, that's essentially what you're doing with it. So that's one that I really, really like. I also bought Algorand, which is cool to see that that's up here nicely. And that one I have staked on Coinbase, and that one's making like 4 or 4.5%. I can't remember, one of the two. So and that's a top 20 crypto. Again, getting 4.5%. So you get there's a lot out there that you can get. Okay. All right. I'm getting off that high horse. I'm not going to talk about mortgage bonds today, but if you follow my channel, you know that I'm a loan officer. That's what I do. I'm typically following the bond market, showing you what's going on. We're having another bloodbath today in mortgage bonds, and rates are going to go up. I've screamed it from the top of my lungs. So many people were waiting for rates to go down, and I told you that that was not going to happen, and now it's just a bloodbath. Look at this ugly candle. Ugh. So here's what is concerning me about the stock market. Let's go ahead and refresh here real quick. And it's funny because I was planning on saying this before I even saw the markets today. But I'll tell you what concerns me about the markets. First of all, and this is where inflation can really be deceitful. Inflation can be really, really deceitful. Oh, hold on here. Let me get to a question. Sorry, guys. I'm bad about this. Is the percent dependent on the price? Dollar amount is different during a bear market, isn't it? So good question, Matt. And, the reality is the percent can change at any time for any of these investments, and they'll all have that little disclaimer, like the APY can change whenever. But certain ones, it's not going to change because, for example, when we were looking at the Polkadot, we know that you can actually stake that. If you were savvy enough, you were tech savvy enough to go and, stake the Polkadot yourself, you would be able to make like 12 or 13%. I think it was 14 last time I checked, but let's just say 12 or 13. So if they're willing to give you 10, there's not a whole lot there. But if you buy $4,000 worth of their coin, they'll give you the full pop, right? They're still getting your deposit. They're just passing through the stake reward that they are going to get themselves, and you're buying $4,000 of their coin. So it's still good for them too. So it just depends. Like a Bitcoin, there is no such thing. So when we look at Bitcoin and what they're paying on that, 4.5%, they're not getting anything for that. It's just literally a deposit. They can take and they can loan the Bitcoin. They can do whatever they want with it, but obviously they owe me a Bitcoin at the end of this term. So they could lose money if they screw that up, but they're paying the 4.5% on that one. So that could definitely change. All these can change, but it's not dependent on the price. It's not dependent on the price at all, because you're just being paid in crypto. And that's kind of how that works. Now, if you pay attention to these, if you look, which is what I've been doing the last couple months before I started really actually staking these and getting into this, you'll see that these have changed very little. Like very few of these have changed, and the ones that have changed have gone up. Ethereum here was not 5.5%. Last time I checked, Ethereum here was like 3%, which is why I put mine with Coinbase at 4.5%. So, they seem to be going up, and that's kind of the new age of what's happening in the digital banking space, is that you are seeing actual competition for business. You are seeing these companies do things like pay you interest daily and show you the amount of interest that you're making daily. On Coinbase, when you stake, for example, the Ethereum 2, which I have staked there, that pays 4.5%. If you go and you look at the stake, maybe I could just show you here. I'll just show you, because I didn't want to pull up my account for obvious reasons. But I can probably just show you how this looks, because it really is cool. And to me, it's just, this is how, here, let's do Algorand, because it's a smaller one. You'll be able to see the numbers moving more. And I don't own that much of it. But here, let me show you. Turn my camera on. Maybe if I do it like this. Okay, cool. Money bags. Let's get rid of the money bag. Let's see if you can see that. So I have 10 grand in Algo there. Do you see where it says lifetime rewards? Is that visible? The camera's tripping out a little bit. Do you see how it's going up? Bah. This isn't super easy, but I just wanted you to kind of see. See how the algo is going up? So it's showing you your rewards, and they're climbing. Isn't that cool? 4% I'm getting the algo. So that's the difference in the modern banking technology that's taking place. Is I could sit there and I could stare and watch my account grow second by second. Whereas, the bank doesn't want to pay you interest till the end of the month, or give you your CD at the end of the quarter, so on and so forth. So, my opinion on it is just that it's something you should do if you already invest, but I wouldn't go buy Ethereum because you want to make 5.5% on it. Don't do that. But if you already believe in Ethereum, you're already investing in Ethereum, maybe move it to your crypto.com wallet so you can go ahead and make 5.5%. Why not? Or maybe flip it to ETH2 and stake it on Coinbase like I did for 4.5%. Why not? So, good question, my friend. Okay. I don't know what this means, but I have a feeling VURFYI. Yeah, I'm not sure what that means. Okay. So here's what's getting frothy to me about the stock market at this moment in time. Inflation can sort of mask a bubble. Inflation will mask bubbles. And what I mean by that is, for example, let's say you have a company that does a 15% revenue growth last year, and they report that. And quarter over quarter, they're 15% revenue growth. I personally believe that that's about where inflation is, 15 to 20%. So even though the Fed is telling us it's 6, it's much higher. We always know it's always higher than what they say. So if that's the case, then they really didn't do a lot, did they? It's really kind of a push, but the way that it might be, perceived on the street, Wall Street that is, not Main Street, is that, hey, they grew revenue 15%. This is a stock that deserves a higher premium. It looks good. It makes the PE look better. So that can sort of bubblicious some of these things up. Also, the whole stock market, particularly the NASDAQ, has really, really, really been pushed by Tesla. Tesla had a blowout quarter. I mean, an amazing fourth quarter, broke records, set a really high standard, really high bar. I believe that is kind of setting things up to be knocked down. I mean, just imagine, and Tesla's been running it for a long time. And I think Elon Musk increased his wealth by $30 billion in the final quarter of the year last year as a result of the stock running up. But, I believe that when you have one stock that's doing really well, that's blowing away expectations, and by the way, I believe in Elon Musk, and I don't think you should sell Tesla if you own it. I mean, I think it's something you just hold on forever. You buy a share for your kids and just watch what happens. It's the Berkshire Hathaway, for real. He's the greatest inventor of our lifetimes, and the things they're doing are absolutely unbelievable. But that said, I do believe that when you have a stock that has sort of outperformed like that and has dragged an entire index and really an entire market with it, imagine if they have a disappointing quarter. What if the first quarter is kind of weak? What if they have a, just a piece of bad news, maybe a big recall, or so, there's so many things that make it really fragile. And I just don't know how this market can continue to run like this. I just don't know. When I look at Bitcoin and I look at the chart there, is one of two things to me. And I see your question, Girish. I'll get right to you in a second. It's one of two things to me. It's either a bear trap, because it's set up for a perfect short trade. I mean, it looks like we're underneath certain moving averages. I'm not going to get into too much technical analysis here, but we're underneath moving averages. We don't have the setups that we have in the past for the volatility squeeze to make it go higher. It looks like the volatility squeeze could shoot it lower. I'm worried. I am, that we're going to see Bitcoin back in the 30s in the near future. I really hope I'm wrong. But I don't like the way that it looks. I feel that there's a lot of bubbleliciousness across the board. And the only thing I don't feel that way about is real estate. Real estate is just such a lack of supply. And why would Bitcoin be going down? I always ask myself this, like, who is selling Bitcoin? Who is dumb enough to have bought a Bitcoin and then sell it? Is it just traders? No, it's people who are chasing alts. It's people who are chasing the next Bitcoin. It's people who are looking at, this and looking for the cheapest thing they can find in the top tier, going, oh, Tron, 7 cents. Let's put it all in that one. Even though there's 101 billion Tron, let's put it all in that one and hope that we hit a grand slam. I think there's a lot of that going on. So, and like Decentraland is a big one. I actually purchased that one. Again, Decentraland is another one. I'm going to be staking that one on crypto.com and make like 4% on it. Axie Infinity is another one that's really good. You can also stake that one and make some coin. This was just at $100 and some, I'm pretty sure. It's at 86. Now, one thing that a lot of people didn't notice, oh, wow, yeah, look at that. Look at today, just fell off the mark. Just wow. Yikes. Fell off a cliff. So a lot of people don't realize that some of these altcoins have already been hammered hard recently. A lot of them have been. But Bitcoin has just held up. It's held up against it. And so you don't really feel like it's a bear market, but it does kind of look like it. The question here, Garish, what's up, Garish? What about tax implication? Does it need more IRS reporting to be filled as interest? So here's my suggestion to you, Garish, because I'm not a CPA, but I have watched some videos on YouTube. Do a search for how to not pay taxes on your crypto gains. Just do that search on YouTube, and you will see what I'm talking about. So when you buy crypto, there's some things you can do. So just check that out. Now, if you are just like totally above board or whatever, and you're like, hey, I don't want to like walk a fine tax line with the IRS, totally get that as well. Just go ahead and, pay your interest. They're going to send you Like if you do Gemini Earn, they're definitely going to send you a 1099. Like they are acting like a bank. When you sign up for their account, it's like a bank. You know, they want ID. They want you to go through a verification process. Like you get an account here. It's a real account. You can set up all kinds of security features, if you want to, as much as you want. I suggest you set up as many security features as possible for all of your crypto. And, you know, to use as little on your phone as possible. Like don't have anything big on your phone. Use the desktop versions. Try to lock things up as much as possible. Put your passwords in a safe deposit box written on a piece of paper. Only you and your spouse have the key to, or your heirs. So that's, you know, the tax implication is just normal income, basically. So yeah, if I have $100,000 GUSD and, you know, I make $8,000 this year on it, they're going to send me a 1099 for $8,000. So if you have a crypto losses, you can write off against it, right? That's one thing that's nice. There's a lot of strategies for that. Like if you have some losers in your crypto portfolio, you go ahead and sell them, right? Realize the loss, write it off against the interest you made, buy them right back. You know, that's something you can do that I don't need to be a CPA to tell you about how that works. So there's several things there. Check it out. Do a search for the YouTube video and you'll see what I'm talking about. It's definitely out there. Okay. So I feel a little bubblicious in the markets right now. I feel like we're going to see, in fact, it should be right here on CNBC. It should be like the top story. Mortgage rates hit 9-month high. Yeah, and loan demand drops. You know, rates going up is good to help curb inflation. There's no question about it. We need rates to go up. Rates being low is not good. It's not good. But we also have a situation where our country's in massive debt. So it's difficult to move some of these things without moving the other. Like how do you keep low mortgage rates, keep low rates for treasuries so the government can afford to pay their debt, which they can't already, but then increase rates in savings accounts? You know, how do you keep low auto loan rates? So how do you have the good without the bad? You can't. And that's the problem. So we want to curb inflation a little bit here, and you're going to see the Fed raise rates. Stocks fall after Fed hints it may be more aggressive at removing stimulus. So there you go. The Fed is realizing this. Inflation is really, really bad. It's really, really bad. I've been telling you this for like 6 months. Is the most obvious thing, longer than that, April, however, like 8 months. You know, is the most obvious thing of all time. So I don't think the Fed didn't know the inflation was that bad. I think they lied to us. There's no way they're that stupid. I can't be sitting here from my home office smarter than the Fed. They have more information than I do. They have more degrees than I do. So I mean, it was not a guess. It was obvious. So now they're saying, you know, into the red as rates rise to highs of the session following Fed update. And that is probably why we're seeing the sell pressure here on mortgage bonds too. That's most likely what's going on there. We were just watching it crater a second ago. That's probably what's happening. And so, you know, rates going up, it does kind of suck for a lot of things, but we need it desperately to curb inflation, which is a real threat. So the question is, how will the crypto market react to this? You know, how is crypto going to remain correlated, you know, to stocks? The more institutional adoption we have in crypto, the more correlation there will be. Gosh, dang it. I'm so sick of this website doing that. I don't want your damn headers. Okay. So Bitcoin is holding strong, man. Buyers are really in there. There must be a big buyer with like a limit buy order somewhere in this range, because they are really holding strong at this level. Short sellers have tried to come in and snipe it. They tried yesterday and failed. Somebody is, hopefully it's got to be Michael Saylor, right? It has to be. Somebody is holding the line. But if we look at this, let's see if we can overlay this right here, right now. This will really tell you the story of what I'm talking about. Like, we need a divergence in the correlation between Bitcoin and, let's call it, the S&P 500. We need to see a divergence here. Obviously, Bitcoin is more volatile. Let's do a shorter time frame. I wonder why it's writing it like that. It's kind of weird. But you'll see that like there's some correlation there. Let's just do 1 month. Maybe that'll, oh, why is it doing that? So bizarre. You can't really see it, unfortunately, but there's a lot of correlation between the stock market and Bitcoin. And we want to see that dissipate. We really want to see Bitcoin be its own thing. In fact, like situations like this where the Fed is saying, hey, inflation's out of control. We need to get on it more quickly. Puts wheels in motion for balance sheet reduction. That's balance sheet reduction means they're going to sell stuff. That's scary. So the Fed is taking action. That really should send Bitcoin higher. People should go, yes, okay, get out of stocks, get into coin. And, but with institutional ownership, we may not see that. So that's a big thing to watch right now, to see if, Bitcoin is going to continue to be that really good long-term hedge against inflation and against the system, or if it's just now become part of the system. That's really the question. It's better, for sure. It's better than owning a stock. It's better than all those things. And it will ultimately prevail long-term, in my opinion. But in the interim, where we are at this moment, is it going to, if the stock market crashes, will Bitcoin crash? Unfortunately, I think the answer is yes. And I think that's what's going to happen. But I really hope I'm wrong. I really, really do. And in the meantime, make sure you're earning. I don't have any links for you to like referral links or whatever for crypto.com or for Gemini. They probably exist, but I don't care. I'm not trying to make $2 on sending you a referral link. Listen, just do what's best for you. Take this information, do with it whatever you want, but know that in this financial climate that we're in, things are changing and they're changing quickly. They can be changing for your benefit if you pay attention, but we've got to pay attention. You're going to have to do some studying every day to keep up with this stuff. And even if you do an hour's worth every day, it's not going to be enough. So try to focus in on a few things, maybe whether it's a few coins or a few sectors. Try to stay focused on that. Keep an eye on things and just know that you don't have to sit back in the legacy system and just be on that Titanic. There are speedboats out there that you can get into. You can go in different directions in, and maybe they're a little bit more risky to be in, but you have a lot more control of what's going on, and you can be in a better ultimate position for the investments that you believe in long-term. If you are, for example, an Ethereum guy and you really believe in Ethereum and you own a bunch of it, why not go and make 5.5% on that while you're waiting for the price to go to 100,000? Why not? Why not? May as well, right? So there's opportunities out there for that. Check it out. If you like this stuff, subscribe to the channel. That's great. I do talk about crypto. I talk a lot about real estate, the mortgage business, which I'm in. If you want to refi, you have a question about home loans, give me a shout. That's really, the only way. If you want to support me, you can do that. That's cool. Subscribe to the channel, like the video, whatever. But mostly I'm just here to just share what I'm learning, what I'm seeing out there. So hopefully that's helpful for you guys. Have a great day, and I'll see you again soon.